Good morning, traders and investors. Steve Gans here with the weekend update. I'm actually doing this on Saturday, April 19th, 2025, because tomorrow's Easter Sunday. So those of us celebrating Easter, happy Easter to everyone. And now we'll get on with the weekend update. So first thing I want to do here is, as I usually do, run through the indexes. Now we take a look here at SPX. Couple things that you'll notice is that, as I had mentioned last week, we did not break above 5,500. We came about halfway back on this big move that happened here a week or so ago. Now, about a 50% retracement is pretty normal, but now we're just starting to chop a little bit sideways here. My expectation for the markets right now is still neutral to bearish. I think it's not out of the question that we could end up back down here in a week or two as we get deeper into earnings season. One of the reasons I feel that is that as corporate executives are coming out talking about their earnings this past quarter may actually have been okay, but the forward-looking statements are going to be, I think, a little bit dicey because the political environment right now is a little bit dicey. Things are on again, off again. There's not stability in what the CEOs can plan on from a government standpoint to where they can comfortably project earnings and what the earnings and sales might be going forward in the future. Another thing that I want to point out here specifically is this report on consumer sentiment. Take a look at virtually every number or every point on this report is down. Consumers are expecting not good things going forward here over the next few months. This is possibly one of the worst reports that's been put out as far as expectations of our consumer environment going forward for quite some time. So I think that's also reflected in where the markets might go here in the coming weeks. So SPX specifically, I'm thinking that we're probably, if we bounce up, we might bounce up to that 5,500 range. To the downside, maybe 5,000. So I'm thinking that's the range that we're going to play in. I want you to also make sure that you take a look toward the end of this video. I'm going to toss out a trade idea that you might want to consider based on that premise. So just look for that later on in the video. So if we look at SPY as very much the same, of course, as SPX. It's just a smaller ETF instead of the main index, but it mirrors the SPX, basically 1/10 of the size. And then we take a look at volatility, and while volatility has fallen off considerably, it's still running about where those highs had been previously. Now, it is a little bit of a good sign that volatility has dropped as much as it has. That may indicate more of a sideways chop here, possibly a little bit of a rebound. But again, we haven't really fallen below that 29.30 mark much. So there is still some certain fear out there in our markets. We take a look at the Qs. We're going to see very similar chart patterns to what we see in SPY and SPX. In the Qs, I would think that if we rallied, we'd probably be up in this 470 range. If we fall again, probably 420. That's over the next week or two. Again, longer term, I would not be surprised as we get deeper into earnings season if we go lower than that, go lower than these recent lows here, possibly below 400 in the Qs. But I think that's going to take a couple weeks to set in. We're going to have to see quite a few earnings that are going to come out where the CEOs are going to say, and our projections going forward are whatever they're going to be. Probably significantly lower than they would have been without the tariff turmoil in there. And I'm not saying it's good or bad. I'm not smart enough to know the answers to those questions. I'm just saying that it certainly creates a dicey environment for a CEO in today's world. And then the volatility on the Qs, similar story. While it has pulled back, it's still elevated above what some of these prior highs had been. So it hasn't totally retraced. If it got back down into here, the VIX, I would think that would be a very good sign that might bring us a little more stability than what we're seeing right at this point. IWM, IWM's actually showing a little bit stronger. We can see in this sell-off, this is what I had projected as highs previously. It did retrace to about 50%. It's come back almost 3/4 of the way on this big drop here. So IWM is showing a little bit more strength. And I think, I haven't looked at this yet, but I think our volatility, volatility is a little bit lower, relatively speaking, in RVX, but it's still fairly elevated. So to me, it's looking like we are still, I'm going to call it neutral based on just looking at the charts, but I'm going to toss that neutral to bearish in there because of the earnings reports coming up. And I just think that the projections going forward simply are going to be suspect just because CEOs don't quite know what to expect or how the landscape might change going forward. So I told you I was going to give you an idea too. And before I give you that idea, if you like these weekend updates, please make sure you like, subscribe, give me a thumbs up. Feel free to leave me any comments as well. So with that, I want to come back here to SPY. And remember I said my expectation is I'm thinking SPY might hang out here in between the 550 and the 500 mark. That's a fairly broad range. That's about a 10% range up and down in SPY. So based on my premise of the SPY for the foreseeable future, possibly wandering between this 500 and 550 mark, which is actually a fairly wide range, again, about a 10% range, I might look at paper trading an iron condor with the premise that, again, if I'm a little more bearish, neutral to bearish, this trade is going to benefit because it has negative delta. You can see that T0 line there. It's going to benefit a little bit if we do, in fact, get a pullback. Now, if I was a little more neutral and I felt, okay, this could go up as easily as it could go down, maybe I would choose to do a broken wing condor, and I might do something like this where my T0 line tends to be a little bit flatter in here. I have less risk to the upside if, in fact, the market does move up. But in exchange for that, I did add a little bit of additional risk into the downside. So the fabulous thing about options is I could come in here and I can design a trade that fits precisely what my premise is going to be for the markets going forward. So I might suggest I'm going to go ahead and just save this trade as a paper trade. And I will look in on this in the future and just see how this is playing out. So thanks so much, everybody, for stopping in for the weekend update. Greatly appreciate it. Again, like, subscribe if you would.